SoFi Technologies. Everyone's talking about the all-in-one digital bank, the safe fintech play. It's got the bank charter, the diverse products. The story seems simple, right? Listen to Anthony Noto, CEO of SoFi, talk about it on Jim Cramer's show.
Okay, so let's go right to it. First, I don't know, Anthony, if people realize what a big deal this is. I mean, I couldn't just go to the Fed or the government and say, listen, I want to be a bank, right? It doesn't work like that.
No, it's a very arduous process. The bar is really high. The Federal Reserve and the OCC and the FDIC all have a responsibility to protect our banking system, to protect consumers. We think it's critically important to do that as well. We wanted to make sure that we had the right regulatory oversight and the right capabilities to better serve our members. So getting over the bar and being granted the license to open a bank is a huge milestone for us as a company. We'll be able to serve our members much better. Our goal is to be a one-stop shop for all your financial needs, to be there for all the major financial decisions you make.
But what if the popular narrative is blinding investors? What if the real engine for explosive fintech growth, the platform truly capturing the future investing, is the one everyone loves to hate? Forget the hype. Today, I'm laying out the controversial data-backed case for why Robinhood isn't just surviving. It's positioned to dominate SoFi as a long-term investment. You might disagree now, maybe strongly, but stick around for the evidence. You might be surprised. Hey everyone, Janice here from Janice Talks. Welcome back. Today, we're tackling a hot topic, a real clash of the fintech titans, Robinhood, ticker symbol HOOD, versus SoFi, ticker symbol SOFI. Now, I know what many of you might be thinking. SoFi is a diversified financial powerhouse, the one with the safety net of a bank charter. Robinhood? Isn't that just the meme stock app? Well, the research I did points to a conclusion many might find surprising. While SoFi boasts diversification and that valuable bank charter, I'm arguing Robinhood holds the edge for long-term growth investors. We'll dissect their platforms, how they feel to use. We'll compare the visions of their leaders. We'll dive deep into the financial performance and explore why Robinhood's focused strategy and undeniable brand power make it the superior long-term bet, despite the headlines and the risks. Let's stir the pot and look at the facts. Let's start with the user experience, how these apps actually feel. Robinhood absolutely mastered making investing simple, intuitive, and dare I say, even beautiful, especially on mobile. Its sleek design isn't just nice to look at. It was a key reason it attracted millions of new investors. Now that zero commissions are basically standard everywhere, that ease of use becomes a strategic moat, a real competitive advantage. It's built for engagement. SoFi Invest? It's clean, yes, and it's integrated into their big all-in-one app, which is convenient if you use all their services. But for someone focused on trading, it often lacks the dedicated tools, the advanced charting, and the deep research resources that active traders want. Some reviewers have even called it a joke compared to Robinhood for serious trading. Industry rankings often agree. Robinhood consistently scores higher for its trading platform. Think about it. When buying, stocks cost nothing. The experience of buying them becomes way more important. Robinhood nailed this early on. But this isn't just about looks. Robinhood strategically dominates crucial high engagement and often high revenue segments, options and crypto. Let's talk options trading. This is where you trade contracts that give you the option to buy or sell stocks at a certain price. It's more complex than just buying shares and often involves more active trading. Robinhood offers up to level 3 option strategies. This lets users do more complex trades like spreads. SoFi, they're stuck at level 2, which is much more basic. Big difference for active traders. Plus, Robinhood charges 0 per contract fees, and you can trade options easily right on their fantastic mobile app. SoFi doesn't even offer mobile options trading. This is a massive advantage for attracting active traders, and it fuels huge revenue growth. In the first quarter of 2025, Robinhood's options revenue surged 56% year over year. SoFi is barely competing here. Now, cryptocurrency. Okay, SoFi might technically list more coins right now, but here's the critical difference. Robinhood lets you transfer your crypto, Bitcoin, Ethereum, whatever, to your own external wallet. You actually control your keys, your assets. SoFi, they operate a closed system. You can buy and sell crypto within SoFi, but you cannot send it out. For anyone serious about crypto, the ability to self-custody or move assets to other exchanges is a deal breaker. Robinhood gets this. This functional edge is why Robinhood's crypto revenue exploded, doubling up 100% year over year in that same recent quarter. These aren't minor features. They attract highly engaged users and drive significant revenue, contributing to Robinhood's higher revenue per user, which we'll get to later. But Robinhood isn't just sitting still as a trading app. They're cleverly building a stickier ecosystem with features designed to pull in more of your financial life. Look at their incentives. First, the IRA match. An IRA is an individual retirement account, a great way to save for the long term with tax advantages. Robinhood offers a 1% match on your contributions for everyone. That's free money towards your retirement. If you subscribe to their Robinhood Gold premium service, that match jumps to 3%. That's incredibly compelling. SoFi, they offer no comparable IRA match right now. This is a powerful tool for Robinhood to attract long-term retirement assets. And what about the cash just sitting in your account? With Robinhood Gold, you earn a very competitive interest rate of 4% APY on uninvested cash through their Cash Sweep program. What does SoFi Invest offer on standard uninvested cash? A tiny fraction of that, basically negligible. This high yield from Robinhood Gold encourages users to keep more cash on the platform and makes a Gold subscription, $5 a month or $50 a year, really appealing, driving recurring revenue. And they're not stopping there. Robinhood is aggressively expanding its offerings. They recently acquired X1, a credit card company, and just launched the Robinhood Gold card. It looks positioned as a premium rewards card that could seriously challenge SoFi's own card offering. They've also entered the wealth management space with Robinhood Strategies, essentially a robo-advisor. It builds and manages investment portfolios for you, competing with services like Betterment or Wealthfront. For Gold members, the management fee is competitively capped, unlike many traditional advisors, where fees just keep climbing with their assets. There are plans for Robinhood Banking too, aiming for a premium, private banking experience for Gold members, potentially offering high savings rates, maybe even unique perks like cash delivery. And finally, they're jumping into AI with Robinhood Cortex. This tool aims to give regular investors access to sophisticated market analysis, investment ideas, and news insights, the kind of stuff usually reserved for pros on expensive terminals. This isn't random. It's a clear strategy. Leverage their massive engaged user base and strong brand to become a broader financial platform, deepening the customer relationship way beyond just trading. All right, let's follow the money. Numbers don't lie, and the recent financial performance tells a crucial story. This is where tools like FinChat are invaluable for digging into the data. We're primarily looking at the first quarter of 2025 data here. Let's look at growth and profitability. In Q1 2025, Robinhood's total revenue grew a massive 50% year over year. SoFi's GAAP revenue grew 20%. Their adjusted revenue grew 33%, but we'll stick to comparing GAAP where possible. Robinhood is accelerating faster right now. Now, net income. That's the actual profit after all expenses. Robinhood's net income surged 114% year over year to $336 million. SoFi? Their net income actually declined 19% year over year to $71 million, despite being profitable. Earnings per share, or EPS, tells a similar story. Robinhood's EPS grew 106%. SoFi's grew 200%, but that was from a much smaller base in the previous year. And adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization, a measure of operational profitability. Robinhood's grew 90%, while SoFi's grew 46%. Bias tilt. Yes, SoFi hit GAAP profitability first, and credit where it's due. That was a huge milestone. But look at these Q1 25 numbers. Robinhood is now pulling ahead dramatically in both absolute profit and growth momentum. This signals what analysts call superior operating leverage. That means Robinhood's business model seems much better at converting extra revenue into actual profit right now. This might be thanks to tough cost-cutting decisions they made back in 2022, which are now paying off. Okay, profitability is key, but how good are they at making money from each user and attracting assets? Let's look at ARPU, average revenue per user. Robinhood generated $145 per user in Q1 25, up 39% year over year. SoFi doesn't report a direct ARPU, but their financial services revenue per product was $88. Robinhood is clearly making significantly more money from each user. Now, asset gathering. How much money are customers trusting them with? Robinhood's total platform assets hit $221 billion, soaring 70% year over year, partly thanks to an acquisition. SoFi reported over $27 billion in total deposits. Robinhood is in a completely different league here. And net deposits? How much new money came in? Robinhood reported a record $18 billion in net deposits in the quarter. SoFi reported deposit growth of $2.2 billion. Again, Robinhood is demonstrating much stronger asset gathering. User growth. SoFi is growing its member base faster by percentage, 34% year over year versus Robinhood's 8% year over year. But Robinhood started with, and still has, a much larger base of funded accounts, 25.8 million versus SoFi's 10.9 million, and as we saw, makes more money per user. Plus, remember Robinhood Gold? Paid subscribers grew an explosive 90% year over year to 3.2 million. This shows Hood is successfully upselling its most engaged users to a recurring revenue service. Finally, let's talk valuation. How does the stock market value these companies right now? We'll look at data from around mid-May 2025. Market cap. This is a total value of all the company's shares. Robinhood's was around $43 billion. SoFi's was considerably lower at about $14 billion. Price to sales ratio. This compares the market cap to the company's total revenue over the last year. Robinhood had a much higher price to sales ratio, around 13.2. SoFi's was much lower, around 4.6. Price to earnings ratio. This compares the market cap to the company's total profit over the last year. Robinhood's PE was around 27.8. SoFi's was similar, around 28 to 30, though some sources noted its forward PE, based on expected future earnings, might be higher. What does this tell us? Robinhood commands a much higher price relative to its sales. Why? The market seems willing to pay a premium for Robinhood's potential for higher growth and higher profit margins, driven by its tech platform and dominance in trading. SoFi looks cheaper based on sales, but its PE ratio is similar or even higher. This might suggest the market is pricing in slower future growth or lower long-term profit margins for SoFi, perhaps due to its reliance on lower margin lending. Given Robinhood's recent financial acceleration, that higher PS multiple seems potentially justified for investors seeking growth. Leadership matters. Robinhood's management, led by CEO Vlad Tenev, showed real agility with those decisive, though difficult, cost-cutting measures back in 2022. They restructured quickly when market conditions changed. Those tough moves created the operating leverage, that ability to turn revenue into profit efficiently that we're seeing now. This might contrast with SoFi's larger, more complex structure under CEO Anthony Noto, which could potentially be less nimble. Furthermore, Vlad Tenev is highly visible. He actively engages with retail investors, the tech community, and crypto folks through podcasts and media appearances, constantly reinforcing the Robinhood brand and narrative. Noto's communication style seems more like a traditional corporate executive, maybe less directly connected to the specific communities Robinhood thrives in. Don't underestimate brand power. Robinhood's connection with millennials and Gen Z is incredibly strong. For millions, Robinhood was their gateway into investing. Despite controversies like the GameStop saga, there seems to be significant loyalty among this core group. This generation is set to inherit trillions of dollars in the coming decades. Having that strong brand recognition and user base is a massive long-term asset. SoFi generally targets a slightly older, broader demographic, maybe professionals looking for all-in-one financial management rather than just trading. Now, let's be fair, this isn't a one-sided fight. SoFi has significant strengths, and it would be foolish to ignore them. Their one-stop shop vision is compelling. Manage your loans, banking, investing, all in one place. The national bank charter is a huge deal. It gives them access to cheaper funding through deposits, which helps their lending business and provides regulatory stability. Robinhood doesn't have this. Their revenue is more diversified. They make money from lending, like personal loans, student loans, their technology platform, services like Galileo that power other fintechs, and financial services like SoFi Invest, SoFi Money. This offers resilience if one area, like trading, slows down. And they offer free access to human certified financial planners, real financial advisors you can talk to. That's a great perk for members that Robinhood currently lacks. But Here's the key question for growth investors. Is this diversification actually better? Banking is traditionally a lower margin, capital intensive, and heavily regulated business. Does being a one-stop shop dilute their focus? And critically, as we discussed, their actual investing platform remains relatively weak, meaning they're missing out on the highly lucrative, high engagement active trading market that Robinhood dominates. So bringing it all together, after looking at the platform, the financials, the strategies, why do I argue Robinhood is a smarter long-term bet right now for growth-focused investors? Number 1, platform leadership. Robinhood is unmatched in the key growth areas of options and crypto trading. Their user experience keeps active traders engaged and drives higher monetization. Number 2, financial momentum. The recent numbers are clear. Robinhood is accelerating faster in revenue, profit, and ARPU. Their operating leverage is kicking in. Number 3, management agility. They've shown they can make tough decisions and adapt. They're innovating aggressively in strategic areas beyond trading, like the Gold Card and AI tools. Number 4, brand power. Their connection with the next generation of investors is a powerful, durable asset for the future. SoFi offers stability and diversification, which is attractive to some investors, but right now, that translates to slower, less dynamic growth compared to Robinhood's focused disruption. Its reliance on lending carries different risks, like sensitivity to interest rates. For investors seeking that potentially explosive growth potential in the fintech space, Robinhood's focused, tech-driven, high-margin strategy appears more compelling today. The potential upside feels significantly higher, even if the ride might be bumpier. So, that's my take. Backed by the data and strategic analysis from the research I've reviewed, Robinhood's focus on platform leadership in options and crypto, its accelerating financials, proven agility, and powerful brand make it my pick over SoFi for long-term fintech growth potential right now. But hey, this is where you come in. This is Janice Talks, not Janice Dictates. What did I miss? Do you think SoFi's stability, diversification, and that bank charter are being massively underestimated? Is Robinhood's reliance on potentially volatile trading revenue too risky? Drop your detailed arguments in the comments below. Let's have a fierce but respectful debate. I really want to hear your perspectives. If this analysis gave you some food for thought, or maybe even change your mind, do me a huge favor and smash that like button. Make sure you subscribe to Janice Talks for more deep dives like this and ring that notification bell so you don't miss the next video. And please remember, this is for informational and entertainment purposes only. It's based on my research and publicly available data. It is not financial advice. Investing involves risks, and you could lose money. Always do your own thorough research and consider consulting with a qualified financial professional before making any investment decisions. Thanks so much for watching, everyone. Keep learning, stay curious, and I'll see you in the next video.